Hello, everybody. This is Troy. I'm a senior account manager with AvaTrade. As we're getting started here with the fundamental analysis webinar, let's do a quick systems check. Just type OK in the chat box if you're seeing my screen all right and hearing me clearly. Okay, just waiting on a few more responses to make sure the bulk of everybody is up and running okay. Type OK in the chat box if you're hearing me clearly and seeing the screen all right. Mohammed, others are typing OK. It looks like maybe you need to check your screen, make sure you don't need to expand maybe a window or something so that you can see the screen. Let me double check on my side that we're showing the screen. Okay, type OK now if everyone's seeing the screen and hearing me all right. Okay, great. That's why I do the systems check. I had started the system about 20 minutes ago and it looks like it went into idle, so I had to reshare the screen. So thank you for that. Looks like we're up and running just fine now. All right, so a lot happening on the markets today. Fundamentally, we can look at some economic announcements. We can look at earnings numbers. We can look at breaking news reports. And so we'll take a look at the fundamental news, and then we'll get on the charts. And first, we'll take a look at what easily could have been done today by taking a quick glance at the fundamental news earlier today. Show you some technical strategies that would have worked into today's fundamental trend. And then also we'll take a look at what maybe you could do moving forward the rest of the day. What might make sense to you based on the fundamental news and the technical entry points on the chart. As we move forward, as always, keep in mind all investments have risk, at least any that I'm aware of. Certainly trading Forex, CFDs, spread betting, options entails risk. No one trade is guaranteed to win. But quite obviously, we are here because there are large potential for profits on each move. You have to manage risk in a way that makes sense to you. And with proper strategy, proper tools, you should be able to move forward profitably, hopefully, in the long run. And so keep in mind that what we go over is meant to be educational in nature and not meant to be financial advisement. And if you have any interest, the full risk disclosure statement is on AvaTrade's main website. As long as we're talking about risk, as I've been pointing out in recent webinars, if you use the AvaGo app, that's our custom-made mobile app for trading on your trading accounts. It's functional with the MT4 platform. So if you log into your MT4 account using the AvaGo app, you'll notice that there's some extra features that you don't see through the MT4 platform or MT4 mobile login. The AvaGo app does things like calculates your exposure level if you put a stop loss, calculates your potential profit if you put a take profit mark, tells you how much is required for margin. This is all while you're even setting up the trade before you place it. So you can see some additional information with those calculations that are done for you with the mobile app. And then also there's a feature exclusive to AvaTrade called AvaProtect that's available only through the AvaGo mobile app. And so even if you're doing your charting like we do today on the full screen version, if you place your trade through the AvaGo app, you'll notice you have the option to protect your trade against losses on pretty much all the FX pairings, gold, silver, and eventually some other assets using AvaProtect. You pick a defined time period, you pick trade size and everything, and it tells you a flat cost for coverage for that whole time period. It's a really nice feature. You can see on our website, there's a video about it. You can see a whole tutorial about it as well. So keep that in mind. It's a nice feature. And if you haven't seen it, I would say check it out. It might work for you in some cases with your strategies. All right, so in general, what is fundamental analysis? Don't worry, we're not going to spend much time on the slides here. Just real quick, two main types of fundamental analysis. That type of fundamental analysis that's scheduled in regular type announcements, we call that regular economic events. We'll take a look at some of those today. Earnings reports, economic announcements like PMI numbers, factory numbers, jobs numbers. Those are scheduled for exact times, exact days, for exact currencies that they will affect. And so those we can plan for a bit more regularly with our trading plan. The other type of fundamental news is the extraordinary type of news. And that type of fundamental news is like the coronavirus. We didn't know when that was going to happen, that it was going to happen at all. We don't know when the next breaking news article might be saying things are getting worse or things are getting better, which could put fear in the market or erode away from the fear if it's good news about it. So that type of fundamental news can break at any time. In the past months, it was Brexit. It was U.S.-China trade deal negotiations. You just didn't know when articles might break, when news stories might break that were unexpected with that type of fundamental news. And as we go over the charts and we go over ideas about trade entry points and exit points on the charts today, we'll talk about both types of fundamental news and how you can actually prepare for the unknown. You can prepare for the fact that you're trading on the known fundamental news, and also preparing for the unknown, maybe with pending orders, stop losses, that sort of thing, to protect against or take advantage of the unexpected breaking story that could happen at any time. Okay, so it's important to understand there's those two types of fundamental news, and your trading plan should prepare for both, take advantage of and prepare for both types. Okay, so what is the fundamental news today? Let's have a look. I always like to do this, the quick glimpse at the chart. And let me just refresh the page. This has been sitting for a little while, so let's refresh the page. Okay, so I don't trust this number here. It looks like it's off a little bit. It's saying it's up 76,709% on the fear index, on the volatility index. This is off. Let me go to the main page. And let's check maybe another source, which is always nice to do, Reuters. Let's let the page load. Okay, very good. So as we look at these numbers, we see S&P 500 kind of flat, Dow Jones up over 0.5%, FTSE up over 1.5%, the Nikkei up about 0.5%. What does that tell you about momentum? If everything is either flat or green, flat and green, green, green. If we go and we look at the futures, they're also green. These numbers are off though. Something went haywire on this page. Let's switch here and go back. I've never seen that before on this website. But trust me, I was looking at other sources and everything's green today on the futures and from yesterday's market before it closed. What does that tell you about momentum? If you see articles like this, stocks, U.S. futures suggest strong open, headlines are looking positive. What does that tell you about momentum? Here's another article. Global stocks, commodities firmer after virus fever abates, meaning the fear about the virus has kind of died down a bit. Yeah, a lot of you are typing that it seems like positive momentum. The sentiment seems positive today. And that's exactly what we're seeing, okay? Articles, headlines, and also the numbers showing green on the futures, green from yesterday, and positive momentum. And we saw the safe havens and the fear index dropping, okay? So those are the headwinds we're looking at. And if we look at specific announcements, what happened on the pound today? Better than expected numbers. Okay, we see this on the economic announcements that were scheduled. Positive numbers out of Great Britain, some positive numbers out of the European Union, one number that was a bit flat, but two numbers in the green out of Italy. And then we've got some announcements coming in about 45 minutes and on through the day on the USD and New Zealand dollar, Australian dollar. But thus far, we've had a high-level announcement on the pound. It looks like the most positive in terms of the currencies, because we've got mixed news on the euro here, and this was a high-level announcement, 3 bullheads for the pound, and that's the way you read the schedule. Type OK if you're with me thus far. Just want to make sure the screen is still okay and the audio is running good for everybody still. Okay, great. Looks like we're up and running just fine. So in general, a lot of green, especially for the pound and for the overall view of the indices, the futures, as the markets got going today. And the headlines as well, as we're seeing in the various headlines about futures being a strong open. We're talking about a China rebound. And you know, why did China rebound? What's important to understand, the Chinese authorities will do whatever necessary to curb the impact of the coronavirus on the markets. This is what they're saying. They're promising stimulus. They're supplying stimulus to the banks. And so this is what's helping the markets not be so fearful about the effect of the coronavirus right now, especially in China. Okay. And if anyone has attended my webinars, what currency do you think of as having a positive effect on the currency if they're saying this is good news about China, that they're providing a lot of stimulus? They injected 1.2 trillion yuan into the markets yesterday to help China. Yeah, the Australian dollar, exactly. And if the safe havens are dropping, then you might be looking at AUD against the yen. Okay, the yen being a safe haven currency, positive momentum on the markets, positive momentum for China. If you're a currency trader, you might be looking at Australian dollar versus the yen, finding low entry points to go with the fundamental news. Okay. Then the other option is indices. What effect would this have on global indices, FTSE, NASDAQ, etc.? Probably climbing, right? And so let's take a look. We don't even really need to look at the charts to know what direction this has caused the assets to go. So here's the NASDAQ. This is today. You see the climbing. It broke today this resistance level. It just broke this resistance level, and the next resistance level is up here, okay, which is getting to near the all-time highs again. All right, so what kind of simple technical analysis strategy, even if you got in late on this movement today, if you didn't check the articles this morning, if you didn't see that the futures were in green and that the volatility index was dropping, meaning safe havens were weakening, if you didn't see that, and you just got up and said, okay, I see it's testing on an uptrend, it's at the resistance level, what kind of pending order above the resistance could have gotten you in, at least on this late movement over the last 12 hours, 6 hours, 7 hours? Buy stop. Correct, buy stop. And this actually goes back about 10 hours down here. So I take that back. That was earlier today because we're looking at 4-hour candles, but you see the effect. The technical analysis strategy, resistance point, okay? Buy stop right here, and you'd have been climbing all day, actually. You'd have been climbing all day. And even if you got in late, as I was alluding to, the further up you got in, then maybe you take a smaller trade so you can put your stop loss below the support level. This old resistance, once it was broken, becomes support. So even if you got in late, you just half your trade size or quarter it so you can put your stop loss further away below the support, and you could have ridden the second half of that rise up. No problem. Okay, so why do I keep talking buy here on NASDAQ? It's not because I'm telling you should buy. We're going with the fundamental news, right? The fundamental news is all green, positive headlines, volatility index dropping, broken resistance level, indicating a confirmation of upward momentum. This is the move to go if you're following fundamental news and technical entry points. Okay. Again, not every move is right, but you see how well this would have paid today. All right, so let's go to the smaller candles and analyze this a little closer. 1-hour candles. Don't we see multiple opportunities as we go to 1-hour candles? And this is what I was alluding to, is you could have gotten in late and still had entry points. So you've got a resistance level here. That's the first one we drew. First resistance. It broke What time? 3 in the morning. Okay. Those of you that are night owls, or if you just simply placed a pending buy stop anticipating that maybe the unexpected news. Remember I said you can prepare for unexpected fundamental news? That's what those pending orders can do. You go to bed, you say, okay, here's a resistance point. You put your buy stop above that. This, here it was, 11 at night, 10 at night. I'm talking like GMT time. You put your buy stop above this resistance level and go to bed and you say, listen, if it breaks that resistance, must have been great news for the markets, right? And so you put your pending buy stop above the resistance. You wake up in the morning and there it went. You're already in the money. Okay, let's say you wake up in the morning and you missed it. Okay, where's the next resistance level? Right here, right? Here's the next resistance level. So if you didn't get in on this one with a pending order, you get up and you see it's climbing. You look at the futures, you see they're green. You look at the volatility index, you see it's down, and you say, wow, quick snapshot, positive momentum. Let me put another buy stop, or my first buy stop, if I didn't take advantage of the first one before I went to bed. I put my first buy stop above, or second above this resistance level right here. And if it breaks it, great. The next resistance is up here. And sure enough, there's a typical breakthrough candle, larger than the other candles. That's what breakthrough candles look like. And there goes the momentum. It never looked back, would never have hit your stop loss back below that support. Okay, so again, even if you got in late today, here, we're looking at 92.03, 92.05 type entry point. And right now it's at 92.51. So we're talking almost $50 rise, even getting in late, right? If you have a 10 indice position, that's $500 profit in what, 3 or 4 hours? What an easy move, right? Simple technical analysis strategy using pending orders, going with the known momentum and waiting for confirmation of a breakthrough before you enter to confirm that, hey, that was some strong momentum still. Any questions on that? And again, I know hindsight is 2020, but we've been doing this every week, week after week, and showing that it works again and again and again and again. Sometimes it works, and then it doesn't work, right? And when it doesn't work, you simply just have to make sure you've managed the risk on the downside. Sometimes the buy stop activates, yes, Chris. Sometimes it'll activate and then go back down. It's okay. You can either have a stop loss to limit the risk, or if you believe in the move long term, you have a hedge position down there to hold the position until it breaks back. Robert, many, many, many times, and I would say most times, when major support or resistance levels are broken, yes, there's some kind of fundamental news behind it. Not always, but many, many times. Especially when you see this type of breakthrough candle. See the size of this candle? See that kind of breakthrough where it breaks through with huge momentum and then keeps dropping? That's news driven. Okay? Same with this. Breakthrough and it keeps running. That's got some strong news behind it, strong momentum. So don't be afraid to put your entry point up far enough above this breakthrough that you avoid false signals. The ones that are not driven, the breakthrough that's not driven by strong fundamental news, many times will give you the false breakthrough and then back down. And that's where if you have your entry point too close, if it just breaks the resistance by a little bit and you say, okay, I'm buying now, you could get caught on that false signal breakthrough and then it goes right back down. If you're willing to be patient and get in after it's broken through enough to be meaningful, and if it's a true breakthrough with a true breakthrough candle, like the size of this candle, then it's okay to get in a little late because you're anticipating that breakthrough will allow it to keep running the whole day, maybe. Okay, so don't be afraid to be more patient. I call it widening your strike zone. Get in slower. Don't get in as soon as a hair above it breaks the resistance and you try and get in right away. That's where you catch some false signals more often. If you're willing to let it go further and have your stop loss distance then a little further to be back below that support, you'll avoid many of the false signals. You don't, Robert, I wouldn't say you have to wait for the candle to finish. Some people follow rules like that. I like to see that an uptrend has established. So you see the breakthrough, and then you see the uptrend here. You see the uptrend continued, and it didn't go right back down. Breakthrough, pullback, uptrend. You see the uptrend, and then boom, you're in. And I would be looking not at 1 hour candles, but maybe 15-minute candles. Here's the breakthrough, here's the pullback, and here's the uptrend going to a new high right here. So my entry point on my buy stop might be up here. Okay, you're looking at a decent distance to avoid false signals. You sacrifice some of the profit, but at the same time, you're more safe to avoid false signals. Okay, and you're not going to know in advance. You're not going to know in advance where will the uptrend continue. You'd have to catch it and do a market move. But the idea is, as you're setting your pending order, give it a little cushion, a little distance to avoid false signals more. And if you don't want to risk more, then just take a smaller trade size. And even with the entry point a little further from the support, you can still get your stop loss below the support without risking more than you want, just by halving the trade size maybe, and then you can be more patient on your entry point. Okay. All right. So clear indications of how you could have profited today. One breakthrough here, profited. Resistance, you see it pull back. There's your new resistance. Breakthrough, profit. Here's a pullback again. Breakthrough, it came down a little and up for profit again. Okay, I see here where you could have won at least 2 out of 3, and if you were patient with your stop loss, 3 out of 3. If you're scalping, if you're getting in and out, okay. If you just did one long move, you're still in, and that's a good question. When should you get out? If you're in right now, when will this momentum die? When does it make sense to get out? I would have gotten out first at this resistance level right here. Okay, this is a major resistance level. And as it got close, this location, I would have at least done a partial take on my profit. If not maybe all of it, if I'm scalping. If I'm in it long term, then okay, maybe I'm not closing it. If I'm scalping, as I got near this resistance, I would have either closed all of my position or some of it. And if you don't understand how to do a partial close, let me open maybe, let's say, a 1-lot position, buy. Okay, let's say I'm in profit. I'm not, because I owe the spread right now. But let's say I'm in profit and I say, okay, it's nearing the resistance. Let's pretend it's back here. And I say, you know what? I think it might keep climbing, but I want to preserve my profit, or at least most of it. So I have 2 options. Look at the spread already disappeared on this. It's trying to climb some more. I'm in profit almost already, $19 up. So if let's say I want to preserve some of my profit, I can either do a trailing stop, a certain number of points back, and the point includes the first decimal number as well. So 50 points is $5 down in the price, etc. So I can either put a trailing stop to preserve so that whatever high water mark it reaches, if it goes back this distance, then it automatically closes it, preserving the rest of the profit. That's one option, to keep it open, allow it to run as far as it'll go. If it comes back X distance, it closes the trade and preserves the rest of the profit. One thing to keep in mind with trailing stops is they are only client side. If you log out, trailing stop's gone. So make sure you manage it another way as well in terms of the risk. And then the other option would be a partial close. So I could go modify. I could switch from modify to market. And then you see I have 3 options: to sell, buy, or close some of the trade. So I can change to the trade amount of the trade I want to close. So let's say I'm in nice profit and I'm at the resistance level or almost to it. And I say, all right, I'm 75% certain it won't break the resistance. So I say, okay, I think I'll close 0.75 of my 1-lot position. And then you'll see what's left is 0.25. Okay, so I've put in my pocket 75% of my profit, because maybe in my mind I say, okay, I was certain in my mind to take this move that it would rise to the first resistance level or the second. But as I got higher and higher and broke through one resistance level and the next resistance level, and I got to a major resistance level, maybe I'm less certain that it'll break. So then I say, okay, I'll close certain percentage of my trade and leave some of it open because there is still momentum. And then I'd say, wow, it broke the resistance. Look at that. I'm still in. So now I'm still profiting on the rest of the 25%, and I'll let it run. Maybe I'll put a trailing stop on it at that point and say if it comes back, I'll close it, but I'll let it run and see how much profit I can get out of it. So you have different options like this to manage risk and to manage your profits as well. You don't always have to close the whole thing. You don't always have to close any of it. You could do a trailing stop and preserve most of the profit. Type OK if you're with me on that in terms of trying to ride the wave, being able to continue with it without risking everything that you made. And look at the profit it just went up into, $57. And I only have a quarter of a lot open right now, right? So it clearly broke the resistance. It's trying to climb more. Okay, let me close that, bank a little profit. And then what we do, let's zoom in, 15-minute candles. You see it keeps breaking resistance. I could have had another buy stop above this resistance. Once it hit and came back, resistance, breakthrough. And on this breakthrough, it already went up $20. It went up from here, $92.34 to $92.55. Went up $21 already on this breakthrough while we were talking in the last 30 minutes. Okay, so yeah, Mohammed, I used to be a teacher in the States, teaching math and science actually. So believe it or not, especially the math part, but also the science, when we start talking about probabilities and statistics, it really helps you with trading to look at things scientifically and mathematically. It's all about probabilities, numbers, managing the risk, all of these things. So it really is helpful. And maybe some of you that work with me one-on-one as my clients, you understand when I want you to calculate things manually first before you use the trading calculator. It reminds me of working with my students with math calculations. Anyways, we see this is continuing to push up with momentum. We see the resistance and the pullback. And if we go to 5-minute candles, we see it's trying to break the resistance again. How high could it climb if it breaks this resistance? We go and we look at 1-hour candles, 4-hour. The next resistance is up here. You see on the 4-hour candles. So it's up at $92.88. That's another $33 up. Okay, so this potentially could rise another $33 even during the session because it broke this resistance and it's climbing towards the next resistance here right now. It's not guaranteed that it'll reach, right? But the momentum is there. This is what trading is about. It's not about guarantees. It's about going after the opportunities while they exist. And in the case of this webinar, going with the fundamental news that makes sense to you to help you out on the direction. So it's not a coincidence that it broke the resistance while we were doing the webinar and that right now you'd be in nice profit had you traded on that broken resistance. Okay, some scalpers would already be out. It broke the resistance, they got in, $20 climb already in the last 15-20 minutes, boom, take your profit out. Okay, many people trade that way. And we see there it is. Look at it break through. You see, even on the 1-minute candles, you can see the breakthrough candles. Here's a breakthrough candle when it broke resistance down here. Here's a breakthrough candle right here when it broke the resistance down here. Okay, we can see it even on the 1-minute candles. Resistance, 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 breakthrough candle, and up it went. Okay, resistance, resistance, breakthrough candle, and up it went. Resistance, and here's the breakthrough candle. And now the question is, will it continue? Okay, had you been doing this through the day today, you're already in profits. You're like 3 out of 4, 4 out of 4 on the trades. Eventually it will reverse. It'll break through a resistance level and come back. So you don't put everything on one move, right? Unless you want to. You certainly can. I'm not here to tell you what trade sizes you should or should not do, but from a risk management perspective, if you want to avoid the possibility of blowing your account on a single move. Obviously, you're going in a limited fashion with each move and trying to win on statistics. That look at the history of the chart. When you have breakthroughs, if you see in the history of the chart and the asset that continually I would win maybe 3 out of 4 times or something like that, and you say, well, if I'm patient with my entry points, I go with the fundamental news, I wait for the breakthroughs or the bounces. If it's the other way around, if you see that you can profit that way, then that's what you should do probably. And that's what we're seeing again and again each week in the webinars, that these sort of trading systems in the bigger picture work. Not every trade, and not if you only try it twice and give up. When you do 100 attempts, if you can win 65 times, and you might say, well, that's a D, 65%. When I was teaching, that wasn't a good percentage. But in trading, 65% is tremendous. Anything above 50% is great. You can even profit at 40% accuracy if your take profit is further away than your stop loss, right? Yeah, let's take a look at the pound. The pound had some nice announcements. And again, why might we pair it against the yen? Why might we pair the pound against the yen? The yen is a safe haven currency. Safe havens have been weakening today. That's why you would probably pair it against the yen. The second you saw that snapshot of the market, that the futures were in the green and the volatility index was dropping, that tells you pair the strong horse against the weak horse. So let's move the pound chart on and take a look at another breakthrough to a higher point again. All right, so was that not predictable in the last 3 minutes? Look, whoops, sorry, I did a vertical line instead of horizontal. There's the resistance, and you can't get better than that in the last 4 minutes. Our strategy worked again. We saw the announcement on the pound. Let's go back. We saw the announcement on the pound right here. It was at the start of the webinar. I said probably the pound has positive momentum. You remember that, right? We said out of anything here, the euro was mixed, and we said the pound had a high level announcement that was greater than expected. And so we said probably the pound is bullish. Look what happened in the last 4 minutes. Okay, so how many pips profit would you have made with a pending order just above this resistance and buying 4 or 5 minutes ago? It already went up from 142.07 to 142.35. About 30 pips already in the last 4 minutes. You'd be up 30 pips or so in the last 4 or 5 minutes with a simple buy stop strategy going with the fundamental news. And if you weren't sitting here listening to me talking for so long, you might have already, with your first look, saw the positive on the market, pair the pound against the yen, knowing the yen should be weakening. The pound should climb easiest against the yen on a day where, and now this is correct. This is the snapshot look I'm talking about. Everything's green except what? The volatility index / fear index is down over 10.5%. Okay? When you see this is down, fear is down, and everything, futures are green, that tells you if you have a positive announcement on the pound like was there, buy the pound against the yen. Okay? Let's say you feel like you missed this movement on the pound, but you still want to buy on the pound. If that's the case, what kind of pending order would buy if it drops back down to the support? What kind of pending order could you prepare somewhere just above the support, maybe not too close, to buy off the support? What pending order would do that for you? You could program to buy from a lower point right now. If it comes back, it might not come back. It might keep climbing. But if it comes back, what kind of pending order would buy from down here? Switch from market execution to pending order. Buy limit. Exactly, Robert. Buy limit. You have 4 choices of pending orders. Buy limit buys from a lower point. So you could program it, the at price, to buy from somewhere down here if you think it'll pull back and then bounce back up. And at the same time, couldn't you put a pending order up here in case it breaks to a new high point to buy from up there. So you could put a buy limit in case it comes back down to buy from the support area. And if it just goes up and breaks to a new high, that's confirmation of continued momentum. You could have a buy stop to buy from right up here, above the breakthrough point up here. So you could prepare for both. That's if you believe the pound should keep strengthening. Okay, there's a lot of fundamental news why it probably could. So you could prepare both. You don't have, the problem if you only prepare the buy limit, but you think the pound will keep strengthening, is if it goes up now, you never get in if it doesn't come back down. That's why you can have the buy limit to take an advantageous entry point if it does come back down, and you back yourself up with a buy stop in case the momentum just keeps going. That's if you don't want to miss a potential climb. You prepare both. Okay, let's look. Where might the pound climb to? Is there a resistance level that it maybe already reached? So 30-minute candles. It already broke this old support level right here. Support, that becomes resistance. It broke it here. That's what that big surge was. This is a classic breakthrough candle, which took about 5 minutes. We saw the individual 1-minute candles. This was the breakthrough candle. So now you have established uptrend. So you've got technical analysis saying buy. You've got fundamental news saying buy. If you believe in that, you can buy. Again, there's no guarantee, but this is trading, right? Where's the next resistance level? It's here. Resistance, resistance, breakthrough candle, larger than the other candles. Support, support, breakthrough candle. Now it should be resistance again. All right, clear line here. So if you're buying on this through the day today, you might say the first major resistance level you see is right up here, and maybe you take profit around 142.62, something like that, if you view that as an opportunistic spot to get out. Okay, and so that's another 55 pips up or so. 55 pips up before it reaches this resistance level right here. This resistance, resistance became support, support, breakthrough, could become resistance again here. So you're looking at maybe 50 pips more run if this momentum continues. Again, trading's not about guarantees, right? It's about what's the momentum, what's the fundamental news show me, and what should I do to have the best odds? Type okay if you're with me on that, with the technicals and the breakthrough candle here. And by the way, I'm happy with 20 pips profit a day. So this breakthrough, as it consolidated, I'm happy to take that 30 pips that it just ran with my simple buy stop, that 30 pip climb, boom, I'm out. And I have this set up then most likely with a buy stop and a buy limit, trying to take advantage again with limited risk, right? Maybe stop loss just back down in case it breaks through and runs. My stop loss is down here. If it comes down and I get in on a buy limit, my stop loss is down here. Even if I'm wrong, I already profited on the day. And if I'm right, not much risk to go after that large potential profit that could run another 50 pips. Okay, I only have to risk to the underside of the support on my buy limit, or if it breaks through to the underside of that resistance, I don't have to risk much. 4 pips, 5 pips for a potential 50 pip profit. Not bad. This is where I say you don't have to be right even 50% the profit. You could be right 30% of the time on this type of setup. And if you win 50 pips and you're wrong on 5 pips risk 4 or 5 times, it's okay. That's where you have to be patient, right? Pick your spots. Find the fundamental news like we looked at. It's not a coincidence that as we started, we said probably the pound will be climbing. We pull up the chart and it just broke the resistance. Okay, these things happen. The NASDAQ, we said probably climbing. We look and it broke the resistance while we were watching that too. So these are the things that as you learn to look at the fundamental news for 5 or 10 minutes, that's all it took. Look at the current fundamental news, then get on the charts. You see how we're able to predict the movements better after seeing the fundamental news. Okay, before we end things today, any requests on specific asset before we go? We could look at gold, we could look at oil. We could look, someone's asking about NZD. Let's have a look. Later today, no New Zealand, yeah, actually, take that back. New Zealand announcements. Let me make sure we're on today. That was yesterday. So, yeah, New Zealand announcements coming up later today. High level announcement. So that's going to be, you know, GMT time. This is New York time, 4:45. So GMT time at 5 hours. And for your time zone, wherever you are, you have to adjust. So there's some opportunity later this evening, going into the night, for huge movement on the Australian dollar, lots of announcements, and the New Zealand dollar. And then look at the China announcements in the middle of the night. China announcements. What could you prepare? Again, which currency could we prepare? Pending orders just before these announcements in case they break through up or down. What currency is going to move with these announcements? Australian dollar for sure will be affected. If this news comes in worse than expected or better than expected, you can expect some potential large movements on the Australian dollar. And you don't have to get in right away. That's the thing. It could cause movement through the day. Okay, but certainly you could get in as soon as you see breakthroughs, and it doesn't have to be pending orders. If you're up at that time, you can watch it break through and then wait for your spot and do a market move. Pending orders make it so you don't have to be up all night though, when you're talking about China announcements. But definitely Chinese announcements, you'll notice if you follow it, wake up in the morning and look, and you'll see the run that the Australian makes a lot of times after Chinese announcements. Very predictable. So good question. We've got huge announcements on the Australian, the New Zealand, and then China affecting the Australia even later. A lot happening today with announcements. Okay, any other questions, comments? Okay, great. I think this is a good place to stop. We've been going for about 45 minutes. Pick your spots, everybody. Just before you trade, look at the latest fundamental news. It only takes a quick peek, 5-10 minutes, and then find your entry points and go with what makes sense to you. You see what the production would have been even while the webinar was going. Mohammed, you look at the fundamental news. This is how you know the direction. So let me rephrase that. This is how you can suspect the direction that makes the most sense. Nobody knows for sure, but this breakthrough happened right after we said the pound will probably climb against the yen. And then boom, it broke through on the 1-minute candles. Okay, how did we predict that? We looked at this fundamental news that came in, right? GBP, high level announcement, green, better than expected. That came in just today, 9:30 GMT time. You had all day to see that and know that there's a likelihood that then the pound would be climbing against the yen. Okay, good question. So fundamental news first, then technical analysis to find your entry points for the direction you prefer based on the fundamental news. Okay, great. Thank you for attending. We'll be doing another session tomorrow a little bit earlier, 10:30 a.m. GMT time. And good luck with your trading until then. Bye for now.